Okay, quick Tuesday morning radar update. So I'll just quickly go through these markets. If you listened to last week's viewpoint on the markets, looking for a swing day really, and we didn't see it in that consolidation last week, and obviously it resulted in a bit of a puke day yesterday. So what do we mean by a swing day? For me, it's a level the market closes at, previous day's high. But for many, it might look like a hammer in some occasions. It might look like an inside up. It might look like an outside up. But what will happen in every reversal is you'll get this kind of action. You'll get a close above the high of the lowest stick. One market does not make a trend. We've been watching some interesting markets just to see, we've been watching some interesting areas to see how the market reacts to those areas. Not here to pick bottoms, just here to assign my own risk on how bullish the market is. Now, short term, the market's not very bullish at all. Long term, it's very bullish, so that could change. But let's just run through these. Obviously, the transports, considered the leader, has been drifting since May, I think. The Dow, so a spike down towards the 200-day or the 10-month average. Obviously, this has only just got into correction territory, 5%. S&P, this is our little level of interest. We want to see where the strongest markets land. The weakest markets will naturally have relative weakness, so they will go to less longer term meaning average, longer term moving averages. Moving averages, just a measure of time. They're not magic. They're really not. So they're an average of time. So they're very useful. If something's rising on my time frame, I'm happy to stay long. And these are still rising over the short-term time frame. A couple of them are rolling over, as we can see. But as we see, one market doesn't make a trend, two markets don't make a trend. But out of the basket of markets, it starts to, pull the trend model back into. Hang on a minute, you can see the DAX is probably falling now on my short-term time frame, but down to very normal areas, and we've got a gap above, and it doesn't mean we're not going to close this gap and then roll over a bit lower. Nobody knows that. But down into this normal area on the FTSE 100, not a market you would be interested in for bullish stock trades. But the 250, yes, that's a bit more meaningful. How does the 250 look for someone who does business in the 250? Well, previous resistance becomes support. That would be interesting, wouldn't it? Obviously, one market does not make a trend. What about small caps? Well, we're in that mean trend area. Previous resistance, not meaningful resistance, but we've got a little band of it here. It's an interesting area. Now, at some point, markets do reverse. But, how many pullbacks do we get in the market for every bear leg? The average is pretty high. I would always go in the weight of the market trend until it does change. So let's move on from there. I'll just quickly get a glimpse of what's going on. The metals have just been absolutely awful, haven't they, of late? And for some time now, we got pulled out of the metal stocks a while ago now. Currencies, we'll just look at that dollar. As you know, my view is, the market is, a lot of these markets are just in that sort of retrace sort of area. Not much is happening. Here's Bitcoin, the 50% retrace kind of area to the 2/3 retrace, just middle of the road after a wide You know, when the market expands, it has to coil up, and it takes some time. So, you know, it's a digestion zone basically, that pullback area, and you know, the jury's out. The long-term trend's up, the short-term trend's down, and that's where stocks digest in that area. So do markets. Whatever you want, whatever product you want to put on there, it's what you would call correction bull. So longer term is bullish, but the market has corrected, and it's, you know, it's just got to go sideways long enough for it to structurally set up again. And you know, you can look at any market this way. It doesn't have to be Bitcoin, doesn't have to be, you know, but we've got an inflection point we're watching. We're watching this inflection point not to trade the dollar, just to see, you know, the stocks react to the dollar, and we will see you know, if the dollar breaks out here, and I would like to see it go sideways for a little bit longer, and then if it breaks out, 52-week highs is here, some meaningful levels you should really just, you know, respect, and the stocks will react to it. You'll see it in the stocks first. Moving on, pound dollar. So the pound just grinding sideways above these previous highs. Horrible drawn out action. Moving on, first retrace, you know, second retrace, kind of third retrace, but spiky. You know, you're looking for a base there, but obviously it's, you know, it's had a good run. Let's just move on from this, and let's jump into the screens. So it's 10:32. We should have traded 30% to be on average volume. There is an awful lot bouncing today. I'm going to fly through these large caps at quick pace and see if any money's flowing over into the small caps. Investment trust, let's just buzz through these. There's a bit of a theme going on in those last week, wasn't there? I don't know if it's still there. The Japan theme. I'm just going to buzz through these and just have a look. Serica continues, APH. So it's a pharmaceutical stock. It's not the best trading one either, but yeah, I said, you know, obviously I said that back here, and then it went on a fantastic run, didn't it? But obviously I don't have a crystal ball, but a few REITs there. I did sell Kanos. Been riding this one for some time, and it kept going after I sold it for a little move as well. So, you know, it might bite me on the ass, but I was riding it from all the way back here, all the way through this, and I sold it somewhere in this sort of area up here. So, obviously, it's not about picking tops and bottoms. It's about rotating on my time frame and trying to move some money into trending stocks. I'll just, yeah, small caps are quiet today, which is expected. You know, a little bit lower on the food chain, aren't they? But let's just have a look through here, see if there's any focus stocks in here. SUR, I have a position, you know, I've got a stop in the market. That's not gone anywhere near my sort of risk management on that position. So go figure. Stops in the market. Moving on. In fact, let me just have a quick, just punch SUR into the GTRS. SUR. Yeah, it's still up there on the GTRS. It's trading towards what I like to trade towards. So, you it's not even wildly for the guys who like the PE stocks. It's not even wildly overrated there either, because it's a little bit of a boring area. But we'll take it. RFX, big tick down in the forward numbers on that, so I'd prefer to see those out of the way. It's not my area. COG, so didn't even get affected yesterday, did it? Has it gone through news today? We will get a new GTRS ranking for this. We know it was, I think it was a recovery, wasn't it? Yeah. So it's been running stage 1, stage 2, stage 3, stage 4. It's been running a long way out of this first base. So I'll just put the log scale on. Always compare latest price. There's a volatility thing for a day like yesterday. People looking at linear charts on they probably go on to 5-minute charts rather than looking at, if you get a problem with volatility, first do the risk management, know exactly how much volatility you've got exposed to the market as a basket, and you've got it. If you can't tick the box that you're happy with that volatility, well, maybe your risk is out of whack. The next thing is, do not go on intraday charts and try and second guess yesterday's price action. If you have to do anything, go to monthly charts and go, well, what's happening for these stocks on a monthly basis? And that will give you a better clue. And, a simple hack would be, here's a simple trailing sort of hack for someone who's, it would still be very in the noise, I think, but, close above this monthly stick here. You've got an inside month, ignore those. This one here punches above this one here. Ignore it. This is where it's wrong. It moves out of that range. This is where it's wrong. It moves above that range. Inside month, ignore it. We're talking closing ranges. It moves above here. This is where it's wrong. Just on a monthly swing, I'm talking here. It's not how I do it, but it's a little hack just to get your psychology sort of in tune. It moves back above this area here, above this high. Well, inside month, it moves above this high here. Flat, it's down. Remember, this one's in play because this one's the close bar. This one's in play until it closes above this one. Very simple hack to just tune yourself out of at least some of the noise. It's not how I do it, but it's a good, go on a monthly and go, well, where is this? Where could this meaningfully go without even, challenging a sensible area? And that would be a sensible area. And yes, it's not the key to the kingdom, but it might just calm your nerves a bit on a wild sort of market. Creighton's SOM. AMO, yellow cape, leave that out of the way. Mano, so this one, yeah, it just drifted. Let me just move that average out of the way. It just drifted, didn't it? It went on the IPO breakout, and then, I think someone whacked it here and it went straight back to highs, didn't it? So someone bought a bear case out on it or something over here, and it went straight back to highs. Great timing. And then it drifted off after that, didn't it? But it's not trading towards what I trade towards. It was here. That's why it was a fantastic opportunity for those who took it. Moving on. SDI. I think it's just kind of back and filling a bit now. I think it needs to sort of it had that little wild move, didn't it? And a little bit of back and fill will be healthy, I think, after that sort of wild spike lower. Yeah, this is just something someone asked me about, so you know, I do not have a position in that. Just why the line's there. This one went through news today. I think it's got some. It was trading towards extremely solid. We looked at it in the IPO screener, didn't we? And it's 24 on the GTRS, and it's trading towards some solid numbers. You know, because it had such a big comparative, it showed us decelerating still as well. But it was a fantastically big jump in the numbers it was trading towards. The old IPO, early range in IPO, it's a little bit of a wild area to get involved. Better to see a bit more action in my world. So 15 minutes, it's a long one today. I'm going to post this one out. Obviously you will know already, but it's going out public today. Let's quickly have a look what the market's doing. Just let the gap fill play out. It might just back and fill, and if it's going lower, it could well, it will go below this low, won't it? If it's going higher, the reality is we've got some obvious levels. We already closed the gap on the FTSE 100 and the 250. The gap is completely closed from yesterday. You know, huge offside move for anyone who got caught in that. And small caps obviously a bit lower in the food chain, but just see some positive action. You know, the reality is, even if it's going higher, it can trade all the way back into these ranges and build something. So, you know, we will wait and see. Okay.